Hello, everyone. Happy Tuesday. We're entering today, I think, on an interesting day for us all to be hanging out, for us all to be chatting. We got a little bit of a trend downward. We're headed into some Fed action. Yesterday, Barbie gave us a great little rundown as to what the market expects and the tool in order to figure that out. So we will take a look at that again today. Earnings are still plugging along. And so, as always, over the next 90 minutes, we will be covering ES, we'll be covering NQ. We'll probably talk about VIX. That one's a probably, but you know, we'll see where the show takes us. We are going to deliver for you the most interesting chart of the day. Every single day, we deliver you the most interesting chart of the day. So we're bringing that again today. We got a nice little educational segment queued up, and I got a few rounds of free resets to give out to y'all. The ask is simple. If you are hanging out with us, you're a part of the community, you're having some fun, you're learning, you're getting setups, you're getting levels, you're getting charts, etc., etc., etc. All that we ask is that you go ahead and give the stream a like right now. If you are not yet subscribed to the channel, go ahead and subscribe to the channel, because if you want the freebies, you're going to need to be a subscriber in order to be eligible to win. And with that, I would like to welcome our expert traders onto the stream, Miss Bull Barbie and Mr. VTE Forrest.
Good morning. How's Forrest doing over there? Wake up, Forrest.
What's up? I was trying to find the mute button.
There we go.
You found it.
You're ready to go.
Over here.
Forrest, what's going on in the background today? It looks like you've got a new setup.
Look, Luke, every day I wake up and I ask myself one question. You'd like to know what it is?
Yeah.
Not telling. But the answer to that question ends up being this chart. And yeah, I don't know. We're just having fun today. But I missed you guys yesterday, I'll tell you that.
Just had we missed you, chat missed you.
And now we got freestyle Forrest.
Indeed.
All right, well, Forrest, why don't you kick us off? What is that chart that you have in the background?
I don't know. So we have the studio. One day I'll do like a little kind of remote camera for you guys, but my production team threw this up for me. I had no say in the matter. So I don't know. I literally have no idea, Luke. But looks like a futures chart with some RSI indicators on it, I guess. Yeah. That's what we got going on.
All right. What's going on in your NQ chart today?
Let's take a look here. Another futures chart in front of me. So what was most interesting about yesterday was the break in structure. And so I was actually long. We swept this overnight low here, right? So we've been in an uptrend. Whenever you're in an uptrend, you can kind of expect this overnight or early morning liquidity grab lower, right? That gives us the lows, then it moves higher. And so we swept this key level, right? Overnight low, and then we started moving higher, right? And because I trade the volume profile, there's always a key level that we care about, which is this previous session POC, as well as a prior day high. So we had this kind of inside liquidity grab. So the expectation would actually be that we'd go and put in a higher high, right? We'd sweep this high. As we all know, to the power of hindsight and memories, that didn't happen. And so when this actually started to fizzle out at the end of the day, I immediately swapped short because you could like feel the break in structure. This actually needs to, by the way, guys, like, how would I explain it? Like, if we're going to keep this strong uptrend, like this has to sweep this high. Like it has to, right? Higher highs and higher lows. So once you smell a break in structure like that, you can immediately flip bias and just go to the next key level. So I swapped short, held that down to here. I actually cut it already. A little mad at myself. Probably should have held that for this low down here, 19,747. But on the weekly again, actually started on a little bit too low of a time frame. You could have just shorted. There's kind of two ways. There's like that break in structure short, but on the higher time frames here, we also just have the fact that we just closed the week green. And if we look at every not green. In this case, my up candles are white. Every up candle has had a, retracement a little bit, right? And next candle. So literally just ignoring volume profile and just looking at the charts for what they are and expecting the market to repeat itself, you basically could just short off of this weekly candle close, assuming that the next candle isn't just going to rip immediately upwards, right? It just makes sense. The market very rarely on the weekly, if we just scan left, does that. As a matter of fact, we can almost say that it's never done that, right? It's done it right here, right? Here's an example where the week just opened and continued, right? But those are smaller, weekly candles, right? This large, weekly up candle here had a little bit of an inside like pullback here. So there's a few different ways that you can look at it. Obviously I trade the volume profile, but once I saw that breaker structure, I swapped. I actually snagged some puts, had a nice little put play yesterday as well.
Puts on what, triple Q?
No, I only play SPX and SPY sometimes, but okay. SPX has massive tax benefits, so it's worth doing that.
Well, congratulations. You want to take a second and walk us through what you did yesterday?
Yeah, I mean that was literally it right there. So I mean, if we go back down to I guess the one missing component was I always watch ES and NQ at the same time, which is pretty key. So if we look at and let's just talk about the developing VP actually. So both of these, I'm watching the developing volume profile. There was a little bit of a divergence between them. ES was a little bit more like of a bimodal distribution. So let's actually take a look at this, and we'll replay on the 15-minute. I think that might be a little bit more useful for all of you guys in understanding how the volume profile actually develops in real time and like analyzing it. So prior day, importantly, bullish. It's a P shape. Got P shape volume profile. So all the auction pushed higher. It closed with most of the liquidity higher as well. It's pretty important. We're in an uptrend. We closed in a P shape, very bullish kind of shape in the volume profile. So you expect a little liquidity grab, and then again, you would expect after the liquidity grab to come and sweep this high. Okay, so we'll go ahead and select a bar. We'll come back to, I don't know, let's start at 10 a.m. Yesterday. So I'm thinking long, right? So I'm just long, right? 20 contracts long. Cool. Let's just assume that's long. So my initial thesis was this high, right? And then you could put a stop like, somewhere down here or something. Doesn't really matter. Okay. So this plays out. And what I'm looking for is this volume profile right here, the one for this session. And I'm asking myself, does it look like it's going to keep pushing higher? The POC and all the volume, the node that is building should be building higher, right? Unfortunately, what we get is this distribution that is kind of flat, right? There isn't enough bias higher. We do have this nice kind of upward trending shape though on the 15. This naked POC is up here at 57.10. It's also at whatever level that was on NQ. It literally the charts were dang near the same for this trade. But then the VP gets to like this shape, and that's where I start like asking myself, like this doesn't look necessarily like a continuation volume profile pattern, right? So immediately my spidey senses are tingling. We get, once you crack, I mean, I kind of smelled it earlier just because of the volume profile, but especially once you crack this low, like this thing is dead for sweeping this high, and you could have shorted, right? And then at that point, when you have a break in structure, you immediately flip bias all the way to the other side, right? So this thing will, we could close it or it gets stopped out or whatever. I took profits on that. So what is the next key level where there's this overnight low, but there's another low down here as well, and obviously the prior day low. So really this prior day low, it's like if we're not going for a higher high, well then we have to go for the low. We have to attack the low, and you just hold short for that thing, and that was the trade thesis right there.
Forrest, a couple of people in the chat called out that you have spidey senses. I think that's a compliment. And is positive. Folks in the chat, if you have questions for Forrest, either about his trade yesterday, the weekly candles that he was mentioning on NQ, drop them in the chat. I will not be interjecting any opinion, but I am capable of reading your questions. So if you have them, drop them in the chat. We read them all. That's why I'm here, to help guide this along and get the questions flowing. I will also ask, if you have not yet shared today's stream, there is no better time than the present. We're 15 minutes in. We've got 450 folks on with us. As soon as we make that march to 650, I think I've got a little bag of resets to pass out to y'all. So go to your URL bar on YouTube, copy the URL, paste it. That's Control V into your Discord chat, and let's get those shares rolling. And always, if you have not yet liked it, shame on you. You're just hurting all of us. All right. Barbie, can you take it away for a second?
Should we talk about ES?
Let's talk about ES.
So yesterday I noted that we had these EMAs that I was wondering if we're going to kind of get stuck in this week, and so far so good. The purpley one up here is the daily 200, and the cyan one is the 50. So these are our SMAs that a lot of the algos and the hedge funds will use for things, and so those are the ones that I want to pay attention to too. So I'm still watching these. Excuse me. I am really watching, because I will come hover and kind of see where these line up. So right now I'm seeing 55.36 and 55.93. So when I move down to a lower time frame, like an hourly, that's when I really start paying attention to this sort of thing. And these are the same channels that I've kind of been keeping on, because we keep kind of playing them. But this is the channel that I was watching last week, and then we had broken above it, and now we're right back into it. So it does, at least on this chart, we're kind of coming into some support. So if we go to my crazy markup chart, I'll show you what exactly I'm looking at here. And this is kind of the same thing on NASDAQ. They're both really following the same shape and pattern. So we had the consolidation over here, dipped down, rallied above, and now we hit that target. My target up there was the 57. I don't remember exactly what it was. It was this yellow line here. Let's see, 57.12. I think it had some change on it though. So we got that, and now we're kind of working our way back down. So the levels that I'm kind of watching, the 56.80 was really important yesterday. I think that's still going to be important. The 56.30, I think that's still going to be important. And you can see that is kind of what has held us up pre-market. The spot that I'm watching, and if you see, I kind of pulled that out on the daily chart too, is this spot kind of right underneath 5,600. If I hover 5,600, you'll see we have that wick over here that's just above from this low on the hourly. But then we also have this wick up here where that was a high that was broken when we broke out. So this is a really important level here. And I want to point out, so I pulled this wick, and that wick is at 55.97.25. We could also kind of pull this wick. It's at 56.01. In general, I'm kind of considering this the 5,600 area, give or take a few points on either side. And what I'm watching today, we've got this is the trend line from that other chart that I showed you. And then we have this support here around 5,600 that is coming up on kind of multiple ways of looking at the charts. So that's where I'm looking to find some buyers today, is around 5,600. If the buyers can't do much and we keep moving lower, I'm really just kind of watching level to level. There's a lot of levels since we consolidated in here end of April. There's going to be a lot of little levels that we can hit here. So you're asking, what is the somebody was asking me about a line and I lost it. I think they were asking me about a green line. Ask that again, or if somebody knows what that was. But so what I'm watching is if we get below the 5,600, if we're just going to kind of chew through and get real choppy down here. So what I was hoping for is that we kind of end up with some sort of bounce off of the 5,600 area to re-challenge the 5,630 area and see if we can keep kind of, I think we're probably going to be pretty choppy. So this is kind of the range that I was watching. So really this whole range, 5,600 up to 5,700, that's a 100-point range on ES. If you measure kind of the same move from this high up to this high, I think it's about 600 points on NASDAQ. So we've got a really, even if we're ended up ranging we can end up in a pretty nice little range here. So that's kind of what I'm looking at today. And the reason that I'm really favoring the range scenario over anything else today is the data calendar is pretty dead. You'll be able to find some things, but they're not important to me. And the other thing that I'm kind of looking at is FOMCs tomorrow, and that's what the market really cares about. So,
Barbie, you've got a ton of lines, levels on
yeah,
your
I saw
chart.
someone was calling this analysis paralysis, and I have to disagree with that.
Well, talk us through it.
So I'm on an hourly chart. So these are daily and at least hourly levels. So they look really big. Y'all have to think about this though. These are hourly levels. So if we're talking about yesterday we hit 3 of these. We hit the 5680, we hit the 5700, and we basically hit the 5707. So that's 3 levels when you actually move down into a smaller time frame chart. So this is not analysis paralysis. This is taking very basic high time frame levels and pulling them down into a smaller time frame. So that's what I'm doing. So here when we pull this down on the smaller time frame chart, it doesn't look analysis paralysis, does it? Like this is kind of the way this is the way I think about the market and structure all my trades. Is like the bigger context is the bigger levels from the hourly and the daily. And then when I pull that down onto a small chart, like a 5-minute chart, I actually have plenty of room and plenty of meat on the bone. So analysis paralysis, but this is 50 points on ES, which is kind of massive. So I can show you, how that works.
It's only analysis paralysis if you are paralyzed, right? I mean,
Yeah.
people, here's the thing. I would always say less is more, but it literally doesn't matter. Like I've seen,
to me,
I know
this
too
isn't
many
much
traders with,
because I don't have EMAs and RSI and all this stuff. So it may be a lot of levels, but it's just levels. I guess that's the way I look at it. So if I'm trying to say, okay, I'm waiting for the chart to come up to this level, but RSI has to be this way, and MACD has to be this way, and the advanced decline has to be here, and VIX has to be above this EMA, that's analysis paralysis. But when I just look at this really simply, like I've pulled these levels from higher timeframes, and now when I sit down to make my actual trades, I can just wait for price to come to these major levels and then look for the entry. So that's going to be where I'm looking for the little price action signals or something like that. But to me, that actually simplifies everything to where I'm not messing with the market here. I'm not messing with the market here. I'm messing with the market here. And so in that way, it's actually really simple. I could show you how that worked for my trade yesterday a little bit too, because I will add some levels.
I want to know.
Let me see.
Too.
All right, wait. Which direction did you play, Barbie? So you just heard from Forrest about his play yesterday. Which direction were you?
I went long because I just traded the morning session. So I'll show you what I traded. And I actually had a level down here too, but let's see. Do I have those on here? I'm on the wrong. There we go. So this is exactly what I was looking at. And I know this looks like a lot, but I also kind of, when you're using the same tools every day, you get used to using them and it works a little bit differently. But what I was looking at yesterday, and this was right at the end of our stream, so it was kind of hard to talk about, but well, I'm going to turn this other indicator off. I do have too much going on here right now. I'm going to show you this a little bit more simply. What I was watching is we had that data move, and I do have a little short that I did on this yesterday. So if you want to go back and watch it again, I have that too. But we had the 10 o'clock data. So that was this candle that wicked up, and it wicked right up to the level. So there was nothing for me to play just because that was news. And that's a little tricky to get your stops in the right place and everything. So I just kind of waited. But the other thing that I was watching is we had right here, I always watch the opening range, and I like the 15-minute. So I'm taking the first 3 candles, 1, 2, 3. There's the high, there's the low. And for my own mental, I have to put that on the white box because I always trade these with the white. And what I'd noticed is, so I've got VWAP, and I have the white line is the regular VWAP, and then the dotted line is the regular trading hours VWAP. I actually kind of like that one better, but I don't have it all the time. So I keep the regular one on there. But so the data candle wicked up and held this quant and the VWAPs. And then every single candle that came after that, even though it tested this 80 level, came back down and kept holding the VWAP and the quants. But then it was also holding this opening range. So Once things started kind of calming down and we came back into these quant levels and the VWAPs, I ended up buying when we came back above. So this level was 71. I bought right above that. It was just a tick or two above that. And then targeted the 80 level again, took the majority of my trade off at the first level, and then I trailed the rest of this and got out in the lower 90s. So even though we didn't have much to work with yesterday, I was able to kind of, because I had the opening range breakout and the VWAP hold and the levels to play, I was able to take some action on this. So to your point, that it's not analysis paralysis. I'm able to take action on it, and the levels are where the action happens for me. So even if I add one like the opening range breakout level, I still know exactly where I'm going.
There you go. Love that. There's someone keeps asking me the same like philosophical question. I wanted to answer it. It's pretty funny.
Let's do it.
He said, Forrest, what do you do when a setup is flawless? A+ bounce off your zone. Couldn't be cleaner, but you freeze. Spooked by an unswept low, but low just below, and then watch the market rip 100 points without. There's two sides to that. One.
Well, first of all, I want to get this person a book deal. I mean, that was
Right.
beautifully written. That was like poetic.
Either you or ChatGPT need to get hired right now, but whichever one of you wrote that. But there's two parts to this question. So first, there's the assumption that I would miss out on an A+ setup. My setups are at the edges, right? So it is, objectively impossible for me to, miss a trade on a low, right? It wouldn't be an A+ setup. All of my setups, by the way, just as a quick review, I won't spend too long on this. There's 4 key levels: prior day high, prior day low, overnight high, overnight low. Okay, so those are my, what some people call action lines. It's where I look to execute. So by definition, in my playbook, I can't have an A setup unless I get a signal candle in the direction that I want to trade in at a key level, right? So since we're coming down, if I wanted to long, I would need a green, high volume green candle close at this low. If I got a high volume green candle close, right, a hammer candle at this low, that would be an A setup. Anything else, even if I trade it and I'm right, statistically and is probably going to have worse outcomes, right? It'll be choppier, right? So my A setups are far and few between. So the first part of your question is just like, that wouldn't happen. The second part of your question is like, okay, what happens when you miss out on a trade that you want to get in? That happens often, all right? Sometimes you see a trade, right? Maybe it's not an A setup, but it's just some trade you have some intuition about. Less of your signals or whatever your system is using is there, and you take it. You do nothing. You write it down, right? There's literally like the market's open every day, guys, and like something that you learn over time is the amount of money that you make in the markets is purely a factor of leverage and consistency. Like a lot of you call it revenge trading, but it's like you try and go and fix a mistake that you made, and it's just like the market's literally open tomorrow and the next day and the next day, and unless aliens invade us, it'll be open in 5 years. So the best thing that you can do if you miss something is not even try and get into the markets. It's ask yourself, like, what was your thought process at the time, and really write that down. That's why I'm such a huge advocate of journaling. Obviously you can journal the thesis and the outcome, but it's like, why didn't you execute? Like, were you reading a thread, right? Were you going to go long and then you're looking at the YouTube chat and everyone's saying short, short, short. And that's all it took to get you out of your trade, even though you've been, doing performance tracking for a long time. There's little things like that you have to be cognizant of, because it'll 100% happen again. So, yeah, just wanted to touch on that because it was an eloquently written question.
Beautifully done. So if that was you out there, give yourself a little pat on the back. Again, either you or ChatGPT needs a book deal, as Forrest mentioned. Couple things I have for you all. If you think that we should do an IRL meetup at Barbie's Ranch, drop a 1 in the chat. It's an idea that we're toying around with. So yes, drop a 1 in the chat. Second, we're on this march to 650, guys. Okay, 650 is what we're looking for. So if you have not yet shared this stream, if you have not sent it to your grandmother and said, Grandma, check out these amazing folks, this amazing chat room, this community I'm a part of. Now is your chance to do it. I'm rallying the energy. I'm asking you all to put our aura out there and get the stream shared widely so we can do that first round of resets for you. Third, I've got a new segment for you all. We have a new segment called Honorable Mentions that we're going to run regularly. Because again, we're more than just MyFundedTV. Yes, MyFundedTV is what we're all growing to love, and this community we're building, and in the time that we spend together now, 2.5 hours every single day. But we're more than just MyFundedTV. We are also the most trustworthy, the transparent, the adult in the room, the clear, objective pathway to live funding, the fastest payouts in the game prop firm. And so what I have is I've got a couple payout certificates queued up from our trading community that I'd love to show on the screen so we can give some recognition and a little round of applause for our traders. This first payout certificate, it is sized for ants. So if you are an ant watching the stream, you can read what it says. If you're not an ant, that's okay. You call out Joe Trades NQ. There's a gentleman named Joe who trades NQ. Just got a payout for $32,810. Let's give Joe a round of applause.
Good job, Joe.
Good job, Joe. But wait, there's more. Channeling my inner Billy Mays. I believe we have a second payout certificate. Let's take a look. Again, sized for ants. Again, if that's a little bit tough for you, we've got Christoph. Payout $17,930. $17,930 on the screen. Date 5/5/25. Yes, that is Cinco de Mayo. Yes, that is yesterday. Let's give another round of applause for our fellow traders.
That's the way to celebrate.
Woo! All right.
Yes, got tiny certificates, big payouts.
Tiny certificates, big payouts. I love that. Okay. If you, I'm just writing a little message for the chat right now. All right. If that wasn't you, so if your name is not Joe or Christopher, I've got something that'll help. I'm dropping a link and a code in the chat right now that just for the next couple days, we're offering every single person who watches this stream 20% off Starter Plus accounts. Code YouTube. Again, code YouTube. Link is in the chat. 20% off Starter Plus. That could be you. It wasn't you. I hope that at this time next week, I'm going to have these payout certs up for you.
Nice.
Nice. All right. We're 3 minutes off the open. I don't want to look at the open quite yet. I'd love to give it a little bit of time for a few more candles to develop. Yeah. Come on. We don't want to be too trigger happy. You know, we talked about that earlier this week. What I would like to bring us to next is every single day, folks, Barbie brings us the most interesting chart of the day. The most interesting chart of the day. So I would like to ask Barbie to share her chart. From there, we're going to come back. We're going to pull Forrest in, and we're going to take a look at how we're moving off the open.
No, I could have gone for some low-hanging fruit like Palantir after the earnings, but I wouldn't want to be depressed on a morning like today. But I found this one. So this is, I brought this one kind of for you small cap guys today. It's PLRZ, polyrisen, and this is in the pharmaceutical sector. So I brought this one up because it's had some huge price swings. So I thought this one would be interesting for y'all. 263% over the past month. So I'm on the daily chart right now. You can see it's still got some ways to go up to the all-time highs, but after a pretty obvious move down, it's making some moves. So I'll pull this down to the hourly so y'all can take a closer look at what this is looking like on the hourly. So obviously this is what they were talking about. 263% was the total. So this is a news-based move. What they're doing is they're biotech specifically, which in general is news sensitive, but they have a new nasal allergy blocker that's been in the news. So that's what this move is about. Who plays small caps? Give me a 1 in the chat if you play small caps. I wanted to see who's out there. See if we have any Lambo small cap traders, and have you traded this one before? So let's see. I had some other stuff that I looked up for y'all. They also made a partner. Their partner is Eurofins CDMO something, but they are a European manufacturer that is producing this allergy blocker. So they've come out with the allergy blocker, and now they've got a manufacturer in Europe doing it. They have some. They got the studies going down and all of that. So lots of news is coming out. Let's see, they recently closed a $17 million private placement, securing additional capital for research and development. So a lot of good things going on. It sounds like they have a lot of expansion and potentially some more news. So in general, you want to buy the rumor, sell the news. So the rumor would have been down here and the news would have been up here. But the reason that I thought this one was interesting is just when I zoomed back out, there was still a lot of potential in this because there's support way up here. That would be 2 1/4-ish. Some more up here, 2 3/4-ish, and then the all-time high. There's still a lot of room to get to that all-time high. So not a ton of small cap traders in the chat today, but I thought that I would bring this one to y'all's attention.
Caps are fun. They can be a lot of fun. The one thing is, and I have a lot of experience trading small caps, is that they can be thinly traded. And so as futures traders, if you started as a futures trader, there's some things you don't have to worry about, like spread, right?
That's a good point. So we're used to liquidity in the futures market, and you don't have liquidity necessarily in the
it could be very, very different. And even your broker tools, guys, you need to be aware of what your default selections are. So again, if you're only trading futures, it doesn't really matter. But as you grow as a trader and explore other things, even like the gains and losses that it shows you it could be based off of the mid price. It could be based off the bid. It could be based off the ask. You can change it. And if there's a large spread, right, the spread could be $1, right? And so if you're trading like,
limit orders are very
you get in for a contract for $1 and you think you're up 200%, but the actual like last price was, much different than that. Point is, things are different when it's thinly traded. Same with options, right? If you trade equity options that are small caps and they're thinly traded, holy moly, that's a whole different game. So,
and I have noticed when you're in your broker for options or stocks or small caps or whatever you're trading, there's a lot of defaults. And I've had to take the time to go through all the defaults, because even the stop losses, if I'm trading a option spread, the stop loss settings basically need to be different than if I'm trading an equity or something, because again, the spreads get so wide that if you're triggering it based on last, it may not trigger, and you need to have it based off of an average of the bid and ask of different things. So it is worth spending time if you're going to be trading anything other than futures to make sure that you have all your things set up. That's a really good point.
Yep.
Don't worry, y'all. My neck is okay.
I was about to say, like, what are we worried about your neck for?
I was craning. I got a setup. All right. The time is 9:39 a.m. Eastern. We are 9 minutes off the open. I see Abhishek asking for the march to 250 likes on our stream today. So I'm going to encourage that, y'all. Let's get that grind up there to the 250. Let's get the grind up there to 650 folks on the stream. And I've got a round of 100 resets armed and ready to go. Forrest, will you take it away on the open? How are we looking? What do you got for us?
Let's take a look here. Let me find my screen again. So off the open, we pulled back up into this node a little bit. Very simple question that I have here. I have the 4-hour on NQ and I have the ES on the 1 hour. Flip-flopped. Doesn't really matter. So we have highs that are going lower, and we have lows that are going lower on the 1 hour. Same thing on the 4 hour. How long will this maintain? I want to see what time frame is in control here. again, we built this load lower very early, by the way, very early in the day, right? The most obvious target for us to go and grab liquidity is going to be this naked POC right here, right? So there's this price or node yesterday where most of the people participated. That's going to be our liquidity grab if this thing wanted to, like, do a pullback higher. That being said, on the 4-hour, right, and we'll just put them both on the 4-hour, go a little bit higher. We've got 1, 2, 3, 4 down candles on the 4-hour. We've got 18 minutes for this before this next one closes. So I want to see if this closes as a high volume up candle or a high volume down candle. It is kind of a no man's land, right? We swept this overnight. This isn't even really overnight. Like, overnight doesn't really kind of exist in this context. There's only one key level I care about, which is this open low at 19,742, and on ES it's whatever it is, 5,600. Let's just call it, right? So I want to see how choppy we're going to get into this level. As mentioned earlier by Barbie, FOMC is tomorrow, so we could get this, since we've already made a leg overnight, right? I would not be surprised if we close this just like a B shape today, lowercase b shape VP. I'll draw that out for you guys, right? And just pinned. Whoa, my mouse went crazy. If we just pinned here, right, we might not actually get another leg today, to be honest. It could be a really tight, choppy day. And then we chop into the morning FOMC chops up a little bit, and then we get a leg one way or the other. Entirely possible. So yeah, I want to see how this closes. Again, with 18 minutes left, we just hit the top of this node, right? So in my system, you always expect node traversals. Okay, if you're looking for, like, when's this thing going to lose energy, the edge of the node is right around here, right, or literally right around where it stopped. If I can draw a line, okay, you see it came up, edge of the node, right? Those are people. These are people that we're looking at, right? So we ran out of people to interact with, and it came back into the area where there's more people. It's very simple, easy to understand. So right now, I want to see when volume, it's because it's the open, volume's coming in. How is this key candle going to close here at 10 a.m.? That's going to give me intuition about the rest of the day. On a day like today, honestly, is like the perfect day to trade the 2 p.m. candle, because the morning can get really weird. Like, if we get an odd close here, if we don't sweep this, it's better to just hands off and wait for the end of the day. Why 2 p.m. in particular? Because the day has to close in, like, some way, right? So, like, the way that I think about the market is, like, every day is like a story, right? We want to interact with people, and the story has to close on the day, right? Story has to close also thinking of what tomorrow's story is. So there's always that chance for, like, the end of day, like, impulse, possibly, right? And so even if I'm expecting a lowercase b shape close today, for example, let's say that thesis holds up. If I'm expecting a lowercase b shape and the auction moves up to here, oh, well, that's cool. I'll just short back into it, right? Really simple thesis in that regard. So just some things I'm thinking about. I don't really have a trade idea right now, to be honest. I'm really just thinking about what the possibilities are. And I mean, if this closes as a green candle, that's just going to be weird, to be honest. And I'll probably do nothing until the afternoon.
I kind of agree with that too, where on a day like today, where the kind of majority, the gravitation is going to be towards chop, just because of the climate that we're in. And so I agree that on days like today, you may be looking for kind of some alternate trades. So one of the things that I've already been thinking about is we've been working on an iron condor trade. And so I'm thinking, are we going to run the iron condor this afternoon too? So it's things like that. Sometimes you have to be a little bit more creative when the market's being really choppy.
Could you explain an iron condor to the folks who might not?
I was going to mention real quick. It takes me I feel like it takes me about an hour to properly explain iron condors. So on Thursday, I am going to do like a lunch and learn webinar. If anybody wants to join, it's just free on my YouTube channel. But basically, an iron condor is you're synthetically shorting the options on both sides. So you're shorting the puts and you're shorting the calls above a certain strike and below a certain strike, hoping that you're going to close in the middle of those two short strikes. And the reason that you would do that is because the thing that everyone hates about trading options is how you lose premium throughout the day with theta and everything. So you'd be collecting that premium. So instead of buying an option in an iron condor, I'm actually selling it and taking a credit. But in order to be able to do that in a smaller account that doesn't have millions of dollars in it, I have to then buy a strike farther out to make it work. So that's what I'm going to explain on Thursday. There's not a very good elevator pitch for iron condors, but they are a tool to collect premium on options that aren't moving. So if we have options that aren't moving, that's what I want.
All right,
Nice.
folks, is it time
It's always
for a little
it's time.
giveaway?
It's time.
You think it's time?
I know it's time.
All right.
They're getting scared by these little 3-point candles, so we got to give them something.
A little something, a little hope, a little energy on this
Yeah.
Tuesday morning. All right. I have coming right around the corner for everyone out there watching 100 resets up my sleeve. 100 of you, 100 unique people out there are going to win free resets. The rules are you must be a subscriber on this YouTube channel in order to be eligible to win. So if you are not yet subscribed to the channel, I'm giving you a 5-second countdown. Yeah, Luke, thank you for the resets. What nobody ever says. We got 100 resets.
I technically trolled you in one of my videos and you haven't noticed yet. Neither has the chat. I'm waiting for someone to notice how I trolled Luke in one of my videos.
Okay. You've got to get him out
Now
of
he's nervous. Yeah.
All right.
Now they better be ready.
Now they better be ready. That was us stalling for you. So you can go ahead and hit that subscribe button. You can like the stream. You can even share the stream. If you're benevolent, think about this. Do you want to do the right thing today? Did you wake up today and say you want to do the right thing? If you do, you would go ahead and share the stream now. So that way those that you are friends with and that you interact with have an opportunity to win as well. Again, just if you want to do the right thing today, you want to feel good about doing the right thing. So with that, code is going on the screen now. 100 of you are winning free resets. Code LIVEMFTV. Again, code LIVEMFTV. 100 people winning resets. If you got them, put it in the chat. Give a big thank you to Forrest. Give a big thank you to Barbie. None of this would be possible without them. Keeping us rocking and rolling. Keeping the codes flowing. I see some got it. I see some thank yous.
There it goes. I love seeing that.
We have some winners today.
That's one of my favorite parts is when I see all the got it.
It's the best part. There we go. Oh, yeah. Now we're cooking. All right. What I would like to do next is every single day on this show, we bring you a piece of education. So I'm going to pass it to Barbie in a minute here to take us through our educational segment of the day. So far, in the first 45 minutes that we spent together, we talked about ES, we talked about NQ levels for the day. We talked about interesting charts via small cap stocks, which I don't think we've ever done that. This is show 16, our first day talking about small caps. Next, we are bringing you education. Right as we wrap that up, we'll be closing out the 10 a.m. candle. So I'm going to take it over to Forrest, who likes to trade the 10-hour, 2-hour 4-hour, 2-hour candles, which develop at 10 a.m. Eastern. So I'm going to send it over to Forrest. We also ran a poll in the chat asking for everybody's bias for the day. We got 43% of you are bullish, 40% are bearish, 18% are just here for the education. If you're just here for the education, give yourself a round of applause. But Barbie, why don't you take it away for us?
Sure. Well, I was curious personally, and so I was doing some research on this the other day. I talked about crude and how crude has just been beat up on. There's a lot going on geopolitically, OPEC and increasing supply to try to, it's OPEC's control over different countries. It's something you can use to control somebody who has a lot of crude reserves, and that's a big part of their income. But what I was wondering is because when you're making crude, you don't end up with just crude. There's all these kind of other products that come out of it. And a lot of times when you have crude, you end up with natural gas too. So I was kind of curious, why doesn't the natural gas chart look like the crude chart? So I wanted to understand this a little bit better. And being from Texas, there's definitely a lot of crude that comes out of Texas. And so it always just feels like it's from here. But if you kind of back up and put things in perspective, depending on, hang on a second, I got to do something. I had to manage a trade real quick. So if you are going to move crude around the world, it's really easy. There's every single country can accept crude, move crude. Like everybody's built up to move crude around. And that's not really the same as natural gas. Crude is really simple. You can put it in a barrel, you can put it in tanks, you can put it on ships, you can do all kinds of stuff to move it around and store it and things. And natural gas isn't exactly the same. It takes more to have a facility that can collect, manage, handle natural gas, even to liquefy it, store it, move it, keep everything safe. It's not the same as crude, where everyone kind of already has the infrastructure set up and all that. So for that reason, natural gas cannot be as affected by the regulations and things that all of these countries are doing the same way that crude can. So if you have crude oil in Texas, you can move it to Wisconsin, you can move it to Africa, you can move it to Asia, you can move it wherever you want. If we have natural gas in Texas, it's going to need to be piped and really kind of probably stay in Texas. So for that reason, if you increase the supply of crude oil, you can really drop the price of it hard, but you don't have the same effect with natural gas. So even if you're upping the production, it doesn't matter as much, just based on how the actual physical natural gas can be moved around the world. So this is something to kind of think of if you're into the energy sectors, or if you're interested in the energy sectors. I know crude can be a little bit scary, especially when we're dealing with OPEC and things. And nothing, again, to the liquidity. If you're really into liquidity, you're trading ES and NASDAQ. The crude still has a lot of liquidity, and natural gas is not going to have as much liquidity as the other ones, but it is something that you can still kind of play, and it's something that there will be ETFs and stocks and options and things that you can use to kind of capture the same idea on the longer term if you're not trading it on futures. But this is just something, the whole kind of light bulb for me was paying really close attention to and really thinking critically about. So we know that the supply and demand is the really hard driver on something like crude oil. But what is kind of that driver, and why would it not affect natural gas? Like that was just kind of a light bulb moment to me that we have to think about in a world economy where it's so easy to move all of this crap around everywhere. That some things are not as easy still. Like there's still things in this world that are not as easy to just do all of that. Someone was saying that it's also because natural gas is used different. I mean, that's also true, but again, so I mean, the demand is higher on crude, right? There's more use for crude, and that's why the infrastructure is set up better to transport and store it and everything. And natural gas just does not have the whole infrastructure and use and everything that crude does. So yeah, that's a good point too. Y'all are onto something there. CL derivatives are also quite varied. Yeah, there's a lot of different things. Like it's a whole can of worm. It's a Pandora's box if you want to go into energy. But I was personally curious, like, why does natural gas not move the same as crude? And that was kind of the theme behind it all, was how you can move and store it. Just actual physical limitations.
Physics. Who knew we were going to learn about physics?
We don't think about that as much behind the computer, right? But when you're trading something that is based on something physical, it's a little different.
Wait, can I tell you guys something crazy that I learned recently?
I love crazy.
Okay, you know how Canada has like a lot of crude oil, natural resources, energy resources?
Yeah.
Sure.
Over 99% of all that energy is refined in the US. So
Yeah.
pull it out of Canada, send it across the border to the US to refine it, and then send it back to Canada.
There's a couple reasons they do that though, and one of them was there was supposed to be a pipeline from Western Canada where there's nobody. It's more rural, and that's where they get the oil over to Eastern Canada where all the major cities are and everything. But so in order to do that, you have to build pipelines and things to move all this stuff more efficiently. But they didn't want to have the environmental impact in Canada, so they decided that they would outsource that to the United States. So that's what the whole big game is, and why Canada can get so crippled so easily, because that's their main export and it has to come through the US. And so it can actually end up kind of getting double tariffed because it gets tariffed on the way in and then they're refining it. So it's getting tariffed twice, basically. It's really messed up. It's really messed up. That's why the tariffs were so effective, but the news didn't report it that way, which actually kind of drove me nuts. So I'm glad you're looking into that, Luke.
Got you.
It is so messed up. The oil situation in Canada is messed up.
Vehicle.
Do you mean like my 71 F-250? I think I get about 8 miles to the gallon in that thing.
My car gets such poor gas mileage. I stopped driving in sport because I kept running out of gas.
Yeah.
It's a serious issue.
We do have a Tesla. So that's all of the trucks around here. I can feel better about it because we have our Tesla.
There you go.
All right.
We are coming for this open low on ES and NQ. For anybody,
I was just looking at that low. That's what I stopped and had to take a pause on because we are.
Yeah, Barbie. Okay, take us through that. You said you alluded to you managing a trade. What was going on?
Well, we got this little. I just barely took a little tiny scalp on this, but I was looking at this opening range, and so I actually just made this indicator. So I'm just kind of watching and playing with it today. Let me take the magic levels off. There was one right there, but what you'll notice is it was right at this midpoint. I'm going to go down to a lower time frame real quick so we can see this a little bit better. But I just made a little tool to watch the opening range. So the dotted lines are when it's forming, and then it makes solid lines. And then when we move below it, it triggers with this yellow. But what I was watching was we were feeling this midpoint in VWAP at the same time. So I'd taken a little short scalp there. And then once we made that break, I'm not real confident on breakouts holding today because of the chop. So I just wanted to get that booked real quick. It was just a short little.
Okay.
What time period do you look for your opening range?
I'm watching the first 15 minutes, which I usually watch on this 5-minute, but it was hard to explain what I was watching without expanding it out a little bit. So I'm just taking the first 3 candles, 1, 2, 3. There's the opening range, and then I take these calculations off of it. So what this indicator does, and I'll make a video about this indicator. I was actually planning. I'm gonna try to get it within the next week, but I take the midpoint, and then I take what the distance is from the midpoint and then the targets off of it, just to give me some perspective. Because I was talking about this a couple weeks ago, but I don't know if y'all were here, where I always like to try to get perspective of how big these moves are. When we're on a 5-minute chart, it's hard to really visually, we can't tell how big these moves are. You have to actually measure it somehow, and it's all relative. And so this kind of gives me what I could expect out of this range, and then I can see, well, is that next to one of the levels that I'm kind of watching? Is that a reasonable target and that sort of thing? So that's how I'm using it. But I'll go into this more. I'll do more on the stream when I get this all fully organized too. But this is the way I'm basically watching it. Is I watch the midpoint and how we react. That's a level, the top's a level, the bottom's a level, and I kind of just treat them as levels. So if we're moving away from the top and rip through the midpoint and we're below VWAP, we're not looking for a long down there. We're looking for a little short scalp. But I am really cautious of the opening range, really limiting price when we're choppy too.
Someone was asking me in the chat, like Forrest, it was literally at the worst time to go long. It was right before it popped lower. They're asking me like, why don't you go long here? And I'm like, well, we haven't swept the key level, guys, until we take out the last man or woman. I know I call it the last man theory, but however that trader identifies, until we take them out.
You can't assume.
Until we take them out, the market's gonna go like we already broke structure once, guys. Now, am I a fortune teller? Do I know the future? Can the market break structure twice? Obviously, it can get super choppy. When that happens, like exceptional chop is what that feels like when it's like, wait, that the highs and the lows aren't, doing what they're supposed to. But we broke structure here again, right? We did not sweep this high in an uptrend. Okay, this there's a thing that was supposed to happen. So this low has to get taken out. My assumption right now is that this low gets taken out. And so until it does, right, I'm not really keen to take longs. Like I could, but like that little node traversal, right, which is probably confluence with VWAP, right? But once we hit the edge of this auction here, right, that was your short right there, literally at the edge of the auction. That was your short opportunity. Catch a little scalp, whether you're trading, ES or NQ. So just wanted to call that out. These key levels are really, really, really important, and they make it really easy to trade as well. You just literally hold the
I
trade.
like how you base everything in the context of the time too, because we do kind of go through these regular cycles through the different opens and everything. So I kind of look at it the same way. My playbook has times that I'll look at things. So during the opening session, I'm focused on how the price action's responding to the opening range. But then when the European session is closing, so that would be probably about 30 minutes after you start looking.
Mm-hmm.
That's when I'm paying a lot of attention to. I'm always looking for kind of a reversal in there. So when you kind of layer all of these things together, that's when you start kind of finding your own playbook and edge and everything.
Yeah, we just swept this low on NQ as well, barely. ES though, so I always say
Forrest,
ES is
take
the
a look
dog.
at your screen. And Forrest, real quick too, remind us again why you like the 4-hour and 2-hour candles while you're at it.
I'm lazy, Luke, and I don't want to trade all day. That's the main reason. I also like making money. I'm coin operated, right? I say that across all aspects of life. So there's money to be made on the lowers, but every 6-figure trade that I've made and every like large trade has been on like higher time frames or even swings. So I just do what makes the most money. It's easier in my opinion, right? If you take a few trades a week, I can recall all the trades I took, right? That's why it's really easy for me to remember the trades. I don't take that many trades, right? It's just, so there's a lot of benefits there. Do I get scalpy sometimes? Yeah. But I usually beat myself up. I'm like, why am I doing this? But nonetheless, 4-hour just closed. High volume, obviously, because it's the opening 4-hour candle. That's why I like that candle. And it was a down candle. So since 2 p.m. yesterday, so 1400, for those of y'all who can't do 24-hour clock, since 1400 yesterday, we had a down candle, 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 and we had another down candle. Now, the opening of the next 4-hour candle, which has 3 hours and 56 minutes left, is up right here. We swept this level here on NQ, but we haven't swept it on ES. Okay, so until ES sweeps, I'm still looking for downside to this level. Okay, ES is the leader in my system always. I trade NQ, but I always look for both of them to sweep the key level, and ES has to sweep the key level. Okay, otherwise something really weird is going on. Beyond that, I do have a level lower, right? And so let's expand NQ here a little bit. There's some confluence with this trend line and this shelf, right? So if we zoom out to the higher time frame volume profile, we can see here I'm lining up the auction with the technicals, this trend line, right? So I like trend lines. They're great. I trade off of them quite often. They're even better when they line up with the shelf. So this shelf, again, and I think this is super important. You need to beat it into your brains. These are people. Okay, there's a crap ton of people positioned here versus where we are right now, which is low value, right? We're technically in a low value area right here. Okay, there are literally less people positioned here. And so we just want to be cognizant of that. So I expect some interaction around this price. It's also prior highs, right? So there's a ton of confluence there. That's where I would, start looking for longs if we're going to keep in this uptrend on, this time frame right here, right? So we, again, just quick review, we failed this little time frame here, whatever that is, doesn't really matter, to be honest, but we still have higher highs and higher lows within this time frame. So I want to see if that's going to maintain it and if we're going to hold this kind of zigzag here. So that's what I'm thinking.
All right. I said we'd give a free account to the best question in the chat. I'd like to double down and say we'll give a free account to the 2 best questions in the chat. First one that I saw was how do you pick out your highs? I think this can go to either of you. There are a ton of places where you could pick highs on a chart, ton of different time frames, etc. Talk us through the process of picking out which highs are important or notable for you.
Important or notable, I keep it. This is going to be one of the benefits you just asked me of, like higher time frames. It reduces the noise, right? So there are some very clear. Let's just go to NQ again. If we're looking at structure on, say, what time? Yeah, I'm on the 4 hour. Let's go to the 8 hour even. Let's remove even more noise. Okay, there are only so many peaks, like highs and lows on this time frame that I can be concerned about. Now, unfortunately for me, if I have ADHD, I'm gonna have to wait a really long time. Like every one of these candles is 8 hours. It's like an entire working day for most people before I even get to decide if there's a trade to take, right? Same if I trade the 4, right? I have to wait 4 entire hours for one piece of information. But if I'm trying to find highs and lows, it's really easy to identify which ones matter, right? There's an obvious low here, an obvious low here, right? I can make some argument that there's an inside channel in here. Sure. And you can draw that too. I just like to keep it simple and go as far out as possible, as big as possible. Because even if I don't hold this trade the entire way, again, say we hit the trend line here and this goes further back and you don't hold the long the entire way, you can just be long biased, right? Just knowing where you are in the context of the higher time frame will allow you to have that bias. Preferably though, you should hold, right? You know, even if, you know, all of us here on prop accounts, like you can hold for 4 hours, guys. Like it's entirely doable. That's inside of a day. So that's why I trade the higher time frames. There's less noise, and to your point of like which highs and lows do I care about, if I go down to the 3 minute, okay, and I expand this, it looks very different. Right now I'm looking at data that may or may not matter, right? There's a lot of stuff here, especially if I'm a very technical trader. Do people do it and make money? Sure. I'm not people. I'm Forrest. So that's my 2 cents.
I would agree with the high time frame swing highs and swing lows kind of being the most powerful. I think there's kind of a few different ways I could answer this question, but if I'm looking for what swing highs and swing lows to pay attention to, I always start on the hourly. It's just these are going to be the most powerful. I can see that wick down there is a big level. This one up here is a big level. So this will kind of give some ideas of you know, what swing high and lows. I'll do this down to the hourly usually too. But the other thing that I'm looking at for what our potential high could be of the day or low could be of the day, I honestly don't focus on calling the high or the low. Like that's fun, but it's not really trading. So it's not something I focus on. But if I'm trying to kind of figure out where price could go, because like yesterday, I was saying in our Discord, even if I'm not in it anymore, like I would just feel complete if ES went to 5,700. And that was just kind of based on where the chart could potentially go. I was kind of looking, we had already been up there, so we wouldn't even be testing the high from yesterday to make that sort of move. And then on the low side, I would just be looking again, like kind of where price has ended up, if it's from a major daily EMA or where wicks and bodies are ending in things. This is where I would look for kind of the daily ranges and where our potential high and low could be. That's a disaster. Let me fix that. So then on this chart too, on the hourly, it's kind of the same thing. They're really obvious. I think I did too. When I first started trading support and resistance, I was overthinking it. And it's like, well, is that one? Well, is that one? If it's obvious, it's one. So just kind of look at where these obvious swing highs and swing lows are. And then you can also look at where the previous days are. I'll turn my levels off for this. It's a little bit easier. But I keep my volume on these higher time frame charts just so it's like super easy to see where the trading was, and then I can see that's where the trading day was. But I'll look and see kind of what that daily range is, and then I can make kind of an educated guess on if we're going to stay inside of yesterday's price action or go outside of it based on what's happening that day. So today's pretty slow. This is actually kind of unique because we made this move pre-market. That's how it got in as far as I'm concerned. Like now now we're kind of having to slow down in things just because we have the big data coming. But big answer for that question.
And Forrest, I see you put one in the chat here, which reads as follows. Given the current macroeconomic data and intraday price action, what's your read on underlying market sentiment today, and how is that shaping your positioning or risk exposure?
Thanks for asking. And that was asked by, I don't know how to pronounce your name, so I apologize. But
Wait, give it your best shot.
Kosilniak. Sorry, I apologize to everyone in your family tree. So what's the question? Given the macroeconomic data and intraday price action. So let's break down your question, the actual assumption of the question, right? Is it a valid question? Okay, given the current macroeconomic data and intraday price action, how tied, right? So there's this implicit kind of thing in your question that the macroeconomic data is affecting intraday price action. I think intraday price action has much more to do with intraday positioning and the auction than the macroeconomic environment. For example, this is a very simple analogy. Okay, if I go and buy a house and my house cost me $50,000, and there's all this, talk in the news about interest rates and them going up and down and what's going to affect new home buyers, but my house is now worth $1 million. I do not care what's happening on the macroeconomic environment because of my basis, right? So when you're trading the auction, you have to be aware that it doesn't matter even what Trump says, right? He tweets, okay, people who were, if we zoom way out, let's just go to the weekly, okay? It doesn't matter what Trump says for people who are positioned long down here, okay? Those people are green, okay? Same for people who are positioned short up here. Those people are green, right? And as you squeeze that down to, smaller time frames, it's the same. Everybody is trying to make money. First and foremost, the macroeconomic environment is going to affect, things like, companies' abilities to borrow money at cheap interest rates, which will affect their investments, economic growth, stuff like that, jobs, blah, 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 blah. All that stuff is very slow. So I think your question is fundamentally flawed. Just not to be mean, but I just don't think that, or I guess if I spun it, answered it a different way, I do not care. I don't read the news, guys. I don't watch the news. Okay. Now my investment portfolio down bad. It got absolutely obliterated, punched in the face. That thing is on the floor, can't breathe. So yeah, for that, I don't care, but I attended as DCA as well. But as a trader, I honestly do not care. News to me is, I guess, catalysts. I use those. I think of that as fast forwarding the market towards whatever's going to happen in the auction, right? But again,
I actually really agree with that. I was talking to an older family member. I don't want to be rude, but it's somebody that gets really hyped up with all the political stuff. So it's going off like, well, the next time that moron tweets, it's going to cost me another $50,000 or whatever it was. And so the point that I was making to him was that, over the past 4 years or so, I've basically become an S&P 500 expert. And what I've noticed in the way that the indexes work is the indexes have places that they're going to go anyway. There's places that the market wants to go, and that's based on the participants, whether that be the home retail traders or the hedge funds. There are places that the market wants to do business, and those people want to do business. And the movements that we get in the market, whether it's from whatever the moron tweeted or war news or whatever it is, that's just taking the market where it wanted to go anyway. And that's why sometimes you'll see, why is this good news sending the market down, and why is this bad news sending the market higher? And that's just because that's what the market wanted to do. That's what the participants wanted, and they were just waiting for that catalyst to bring the volume that they needed to get there.
Yeah, you can go really deep with it. I think it's best not to overanalyze it, which is why I like the auction. But it's like, to your point, it's like, hey, good news came out. Why is it going down? It's, well, because people are selling. There's a lot of sell side aggressors. That's why, a ton of people are market selling, right? And the market sells are outweighing the market buys. There could be a ton of other mechanics as well, derivatives, but that's really what's happening. And that's all it is.
Well, people already have places where their portfolios are going to be hurting, or where they need to take profit because it's going to be feeling really good. Those points are already established in people's portfolios. And then the market's going to get there and hit those orders, and something's going to happen. It doesn't really matter what takes us there.
Exactly. So this is one I'll ask this to you if I can, Luke, but I'm asking this to Barbie. I don't know if you
No,
had
come
something planned,
on,
Luke.
dude. You got me
But
excited for a minute. All right, ask
would
me.
you
Let's see.
would you ever adjust your intraday trading plan based on scheduled macro events like FOMC, CPI, or NFP? Then
Yeah, I do all the time.
Barbie,
So
you're cutting me out of the answer.
yeah, because nobody cares. But no, for sure. So like I was saying, if I'm watching the first trade that I take in the morning is usually either an opening range breakout or an order flow play. And so for today, for instance, I was saying that I wasn't confident in that breakout actually breaking out. And that's exactly what we're getting. The breakout's not breaking out. And that's because of what we have going on with FOMC this week. You can see if I take everything else off, I almost have everything else off here. Everything else off, just the little orb tool, we've stayed really within that range. And that's the kind of thing that happens. So I'm going to be looking more to reverse these ranges than extend from them when we have a slow day like this. And then if I'm doing a premium collection play, an Iron Condor or something, they don't work on FOMC days. If I was going to place a morning Iron Condor and expect to get 50% out of it by lunchtime, it does not work on FOMC days and high impact days because we're building implied volatility and things that are adding premium to those contracts. And then I also have I do kind of have some different trades I'll take throughout the day, like kind of at the scheduled times. And if we have something big that day, it will definitely impact whether or not I take it and how I take it.
yeah, definitely. It definitely affects options. Like the news events will affect premiums and things greatly, which can be good or bad depending on your positioning in the market. There was another question, I just forgot about it, but there's some good questions here that are interesting today. Where did it go? Dang.
And so, let me ask this. So on ES, we've been tracking it for the last 45 minutes or so that we are past open. We're marching higher. Does that do anything for either of you yet?
Until we crack. So I expect these nodes to get traversed, right? So we came down, we swept the low, we got a reaction on NQ. Okay, we came back into this node here, right? And I'll just mark it out. Let me clean up my chart a little bit. There's too much going on. So let me get my drawing tool. So there's this node like right here, right? It goes to the low. We came back to the point of control. Okay. Literally what we did earlier, by the way, before we went lower. The market always goes up and down. So until the market proves on the 4-hour that this downtrend is done, because we haven't swept this key level yet, I'm still looking for ES to go for this low, right? I just have to in my system. Could be wrong, but if I wanted to long, the best long that I can get would be a high volume 4-hour candle through this level, right? So those are like A setups in my book. The reason those are A setups is I can confidently hold that all the way to the other side, right? That's a couple. I mean, this is ES. It doesn't really matter. It doesn't matter what chart you're on, honestly. Same thing with equities, right? I could just hold this trade all the way up to here to this new high. So I want something like that. That's really the trade that I'm interested in. I'm not really interested in, scalps. Someone asked earlier, how do you feel about 10 to 20 point scalps? I feel like you are missing the point in this environment. Now, if the VIX was like,
I'll take a 20 point ES scalp.
Yeah, 20 points on ES is a lot. That's but
yeah, if it's a 4-point scalp on ES in this environment, nah.
When the VIX, we have to look at the VIX for context when I answer this question as well. It's important. We're still in a high VIX environment. Is it as high as it was when it was insane? No, but this is an elevated VIX. We're in a volatile environment, guys. So like, you can get 100 points per. I mean, at least go for 50, please. If you're trading NQ or MNQ, like go for 50. If you don't feel comfortable doing that, you just don't have good edge, right? Or you're trading too tight or something like that.
Well, I like how you pointed out earlier. So ES is going to go sweep that low, or you do nothing. So you kind of have before you even get into the trade, like whether you're going to get in the trade or not. So it's not a which trade am I going to take? It's is there a quality trade here?
Exactly. Yeah, and
That's part of the edge. That's part of the system.
That is the system. Someone asked, and I love your your answer on this because I've been talking a lot. Is someone asked, how do you know when your edge stops working, and what do you do?
I don't know if does your edge stop working, or I mean, I think we're always having to adapt. So, in my opinion, my edge is how I look at the market. So I have my perspective, which is taking things from the higher time frame and then executing them on a lower time frame. And that's kind of the elevator pitch. But I have my game plan, and I do have to adapt it. So a year ago, when we were having 30-point ranges on ES, I was trading a little bit differently than now when we're having 100-point ranges on ES. But I haven't changed my whole basic playbook. I've adjusted my sizing, because if I'm going for 4 ES points, that's going to be a different position size than if I'm going for 20 ES points. So in that way I adapt. But the way I look at the market is I'm always looking for things that I can add to my playbook. And some of those plays are going to work better at sometimes than others. So right now, the opening range breakout, because we're in an elevated daily ATR environment and everything, where we have this high volatility and VIX is elevated, that makes it to where the opening range breakout play is more likely to work. So that's why I'm focusing on it right now. If you go back and back test it, it didn't work as well 2 years ago when we were having smaller moves. And so in that way, I'll adapt which plays I'm applying. But like if my edge is the way I look at the market and the way I approach my trades, that doesn't change significantly. It's more adjustments.
Gotcha. I like it.
All right.
Did get lots of good questions today.
Is it good?
We did. Should we celebrate the questions?
Why would we not celebrate?
Why would we not?
Why is that a question?
Yes, and I got some questions in the chat asking for Barbie's address so they could send you like fan letters. So we'll be putting that in the chat in a second here.
Yeah.
Yep. So stay tuned for that. I'd also like to celebrate not only the good questions, but also the segment that we're going to have with Ash Trades rolling around at 10:30. Just a couple minutes here. So we got good questions to celebrate. We've got Ash's segment to celebrate. We got a market moving higher. I know some of you are long. I saw the poll. Only 43% of you are bullish, but there's 43% of you. You might be making some money today. So that is lovely. And so what I would like to do is I'd like to offer up to our community as a thank you to you all another round of free resets. I got 100 resets cooking in my pocket. I'm going to ask Barbie and Forrest for some final thoughts. And I'm going to welcome the man, the myth, the legend, Mr. Ash Trades onto our stream. How's that sound?
Let's do it.
Let's do it. All righty. So code is going on the screen now. Again, you must be a subscriber in order to be eligible to win. Code is Trader Boost. Again, code is Trader Boost. It is on the screen now. If you got it, if you were a big winner, 200 of you out there are leaving today with free resets. I want to see it in the chat. Let us know that you got it. Let us know that you won. I want to see a little bit of celebration, a little bit of fanfare for your MyFundedFutures community. I'd also like to see some unicorns start flowing in the chat as we welcome Ash back onto the stream. But I guess, Barbie, I'm going to send it to you first for some final thoughts for us.
Well, I think we got a lot of good questions answered today. So what else can I leave y'all with? I'm still just kind of looking for us to kind of chop into tomorrow's news. So I'm taking my trades a little bit smaller and just being a little extra patient. I don't want to rush into anything when we're in these choppier conditions, the pre-FOMC market. So I'm just going to be... I'll probably wrap it up a little bit early today. Honestly, the slower markets take more of my patience, so I have to get out a little bit earlier. But That's what we're dealing with today.
All right. I like the discipline, the awareness. VPE, Forrest.
VPA. Yeah, not much has changed here, guys. Nice reaction off of this prior day low on NQ. Again, my thesis, though, my plan, which is more important than what's happening, my plan is to do nothing until we get this key level. So could I have long
Does
this?
that drive you nuts when one of them hits that low and the other one doesn't, though?
Not really. You know,
It can drive me crazy sometimes.
it's so much easier to just like do nothing, knowing that the next time I do something, it's extremely likely I'll make money.
That's
right?
true. So you're filtering your trades out to get the best win rate. I like it.
Yeah. Yep. But yeah, I'm chilling. And like I said earlier, like I think the afternoon is going to be the play. I would be very surprised if there isn't an obvious trade in the PM. I can kind of just smell these things at this point. So that's like, yeah, I'm fine with just waiting
We
for
got the
that.
vibes on the afternoon. All right.
Yeah, I could smell it.
All right. And Forrest, how
Crystal
do
ball.
folks stay in touch with you?
Go to my YouTube channel, Trading with Forrest. I post content there. It's pretty good in my opinion. It might be a little bit biased. If you want to follow my social life, what I'm doing out here in the streets of Miami, you can find me on Instagram at Forrest_the_investor. I do have a Discord. It's called Trade Edge. I got a partner in the Discord. His name is Soul. Pretty cool guy. Really smart trader. Check it out. There's links on my page. And yeah, we're all about trading the volume profile as my passion and purpose to help people make money. So however I can help, I'm here to do it.
All right, Barbie, how about yourself? And folks, stay tuned because we have Ash joining us in just a minute. But Barbie, how do we stay in touch?
I am mostly on YouTube, so that's Bull Barbie Trading. Help me get my subscribers up to catch up with these guys here, please. And then if you want to see kind of more what's going on in my daily life in the ranch, that's Instagram is bull.barbie. And that's pretty much it for my socials. I'm also on Discord. That's the Trading Ranch. You can find the invite on bullbarbie.com if you're interested in that.
But is your Instagram like a lifestyle channel?
It's random pictures because sometimes I forget that I have it, and then I'm like, oh, I should share that with the group. So it's sometimes it's chicken, sometimes it's bees, sometimes it's trucks. You never know.
Wow. I'm looking now. I'm highly intrigued. I feel like I know you so much better now.
I didn't totally know what to do with it, so we're just doing daily life stuff there.
Cool.
Yeah, you're late to that. We've already got Marcy's on there and Terry's on there, so you're late to that party, but welcome.
Right. I'm in now. I made it to the party. All right, Forrest, Barbie, appreciate your time. Can we get a thank you in the chat for Forrest and Barbie?
Let's go.
I'm going to be bringing Ash on with us in just a second here. But before I do that, can we get a thank you in the chat for Forrest and Barbie? Barbie, should we give away 10,000 free accounts today if we hit 10,000 subscribers?
Yeah.
10,000?
All right, if we get there.
Might get yourself in trouble, but let's do it.
Let me get 100 of those, Luke, since you're giving away so many. I'll take some.
All right, you guys have 60 minutes. You better start sharing.
Share.
All right, well, thanks for the time, guys. And let's say hi to Ash. All right. We are now 60 minutes off the open. We got a little bit of movement, a little bit of activity, a little bit of fun happening. Yesterday was Ash's inaugural stream with us. So I'm going to ask Ash for a preview of what we can expect over the next hour here. And Ash, I'm also going to ask you to reintroduce yourself so we can get to know you a little better.
Good morning, and thanks for having me once again. Hello, everyone. My name is Ash. You can call me Matt, Ash, whatever you'd like. My social medias are Ash Trades. That's why a lot of people call me Ash. That is completely fine. So what we'll be doing here, if anybody wasn't here for yesterday's live stream, I will be dealing with the 10:30 to 11:30 segment here on the MyFundedFutures stream. Purpose of it is to show day trading, to publicly journal my day trading. If that gives anybody some education, some learning opportunities, some experience, that is great. That is the purpose of it. I did a little disclaimer yesterday. I'll do a little disclaimer again today. You have to understand that I will be trading my own accounts. Okay. When watching me trade, this isn't just a random, signal service. You have to assume your own risk. Okay. You have to take responsibility of your own risk. All right. You have to take extreme ownership of your business. Okay. So I'll gladly share all of the logic and decision making that goes into the reasons why I do things. Maybe that helps you gain more conviction in price action. And that's the purpose of it. In my opinion, this is a very isolated business. So instead of only getting the experiences that you receive on your own, if we were to share our experiences, we'll get a lot more learning opportunities than we would if we were doing it on our own. So I'll be publicly sharing my trading business. If you can learn something from it, great. Hopefully that expedites your learning curve. If not, come hang out. Maybe it's entertainment for you. Come listen in. Maybe there's some value in it.
Yes. Couple things, Ash. One, I love how you refer to it as your business, right? It's this is your business. You think about it as your business. Your business has expenses, it has revenue. But I love that. Two, Mr. Smith left a comment in the chat that Ash is just one letter, C, from cash. So I thought that was a helpful observation. Yeah, okay, it made you chuckle, made me chuckle too. All right, good work, Mr. Smith. Three, I'll ask the chat if we should do more accounts or resets today. I don't know if you want to, because that means that I have to hop in and interrupt. And once Ash gets cooking, he is cooking. But Ash, just give us a little bit of your background. How did you get to where you are today?
Absolutely. Yeah. So I graduated school with a psychology degree. So I'm very into the mental, emotional aspects that go into this business, the reasons how or why things happen. In my opinion, this market is quite literally a mirror of the individual. Your mental or emotional aspects will show on this screen. If you are impulsive, you will see it. If you are fearful, you will see it. And that is what actually intrigued me the most. So after graduating college, got a full-time job, an office job, 9 to 5. That's where the 401k started. So once the 401k started, I instantly started asking questions. I was, where's my money going? What's happening with it? What to expect from it? And that's where the interest in the markets began. Once I realized, they were just managing my funds and I could do that myself, then I started doing some research in terms of trading, investing, the whole nine. So ever since then, I've been trading in the markets. I've been investing in the markets. I do believe those are two different conversations. So we can split the time. We can talk about investing, but I'll let you know when I'm talking about day trading versus investing, because I do approach them differently. So then comes the business aspect to it. This is a source of income for me, the day trading. So that's why I keep calling it a business, because we have to treat it as one. Okay, if this could become a income source for you, that's the overall goal. That is why we day trade. We look to make, income from each day. Seeing that there is no ceiling on that is one of the things that interested me the most. The 9 to 5, somebody else tells you, what you get paid, when you get paid, how you get paid. When you're running your own business, you make those decisions. So it was very intriguing to be able to work on my own finances outside of work. When that became more income than the 9 to 5, that's when I moved over full-time into business. I do deal with some other markets as well, dealing with real estate as well. completely different conversation. We can save
What
that.
do you do in real
time.
estate?
We're doing short-term rentals. I'm over on the East Coast, so looking at beach houses and whatnot, the whole Airbnb, short-term rentals. Yeah.
Okay. I'm sort of in that game related. I mostly do longer term rentals, but I think I have 4 of them now that are short term.
Very good. Yep. And, that at some point in time will be a part of the conversation. Diversifying is very important in terms of risk. So diversify your income so that you can manage your risk properly, whether that's through a 9-to-5, whether that's through participating in other markets such as real estate. The goal is a long-term vision of higher prices, whether you're talking about the S&P 500, the NASDAQ, or housing. In my opinion, if the population keeps growing, then the markets are going to keep growing. And until that stops, then that's my vision on both of the markets. So I'm looking to accumulate as much as possible in both markets. And that's what day trading does for me. It creates that income source to add to my long-term positions in both markets.
Awesome. Alrighty, Ash. Well, that is enough of me bugging you for the background. Why don't you take it away?
Absolutely. Thank you. All right. Hello and good morning, everyone. Welcome back to another live stream. I'm very excited to get on here with you guys. I will be doing the 10:30 to 11:30 segment each day. So hopefully you guys can gain some value in that. You can watch me day trade. Maybe that provides some value for you and your learning curve. It is going to sound a bit repetitive, I do have to say. I only follow one model in terms of executing in the market. So in my opinion, the repetitiveness is good because it builds muscle memory. So over my time here being with you guys, you will see the same information being presented. You're going to see different logic or decision making that is implemented with that. Okay, so I think the logic and I think the logic that you provide to your decision making is what makes you very valuable. So we do need to go through the logic each time we do it. And when we go through that logic, it's going to be through the scope of the model that I trade the market. Okay, so we can begin to do that now. Let's take a look. So for my model, you're going to see this time and time again. I create a game plan heading into the market. I look to participate during New York Open because I'm in the US and I'm on the East Coast. So for my daily life, New York Open is the best time for me. Mentally, physically, emotionally, my schedule. So in terms of timing, that's what works best for me. You can still participate in other sessions. If you want to participate in Asia, if you want to participate in London, those sessions are fine. Just know thyself, know what works best for you, and when you can give the market your undivided attention. When I go to show up each morning, I'm looking to create a game plan. And this is what you guys are going to see me do each day because, again, I only really follow one model. Okay, I have tried other models. I went through the natural progression of a trader. So I have tried other models. It's not a matter of what works or doesn't work. It's just a matter of what resonates with you the most, where you can find profitability. Okay. What works for me might not work for you, and that's more than okay. The only thing that matters is whether you're green or red at the end of the day. Okay, so figure out what model works for you, how you can define your risk, and what you can identify in these markets, then become proficient in it. And so I'm going to show you what I've become proficient in. The beginning of the game plan for me is always time. Time is my most important element. Okay. I look to participate at New York Open. And then the other thing is understanding high impact news drivers. You can get over to forexfactory.com that has the economic calendar, so you can see when the high impact news drivers occur each week. Now, I can already tell you that there was no high impact news drivers today. Okay, so we're going to identify that. We need to know when the high impact news drivers are because it provides volatility in the market. We need to be aware of when they occur. So get on the economic calendar before every session starts so that you can be aware of the important times of the day. So that's the beginning of the game plan, is time. Time is the most important element, in my opinion. I look to participate at New York Open, and I need to know when the news drivers are. Second part of creating the game plan, second most important element, is bias or draw on liquidity. In my opinion, those two things mean the same thing. Whichever way price is moving, what do you think price is drawing towards? Where do you think price is reaching to? All those things, in my opinion, mean the same thing. It's your bias. Okay, and let's go through bias right now. Okay, for a bias, I start on the daily chart. On the daily chart, I'm looking at swing highs, swing lows, and imbalances, or FVGs, however you'd like to refer to them as. When price is currently above a swing high or inside of a bearish FVG, I'm looking for lower prices. When price is currently below a swing low or inside of a bullish FVG, I'm looking for higher prices. Okay, and so that's going to explain my bias here this morning. Okay, so using the most recent information, we can see that this morning, NQ tapped into a bullish imbalance right here. This is what's giving me a bullish bias. Okay, that's why you saw those buys on the screen for ES. Okay, so a bullish bias is now our second portion of the game plan. And then also, the last thing that I would mention in terms of draw on liquidity is all of these highs in here. Yesterday's stream, you saw me talk about equal highs or equal lows. During yesterday's stream, I had mentioned that you always want to see the right highs be the failure swings, right? So you can see that all of these highs in here are all just lower highs as we move lower. Here, 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 here. None of those highs took out the previous high. So let me put another drawing on here to maybe explain it a little clearer. Here's the difference. Now imagine this. Let's take this arrow off of here. Take a look at this. Notice how the first high was taken out by the second high. Now the difference that I'm trying to point out here is this here. Notice how the first high was not taken out by the second high. This to me is something that price would want to reach for. This to me, price has already taken that area. It's already taken that liquidity, right? So now, in terms of a draw on liquidity, you can see that here. Look at all of these highs in here. Okay, notice how none of these highs took out the previous highs. To me, that looks like price wants to reach there. Okay, so there's another easier way to explain this. A lot of people use the Asia session liquidity as a draw on liquidity, and that's what you're looking at here. This is all of Asia. People may be targeting, the Asia session liquidity. That is what I'm targeting here, right? And that's why you saw the buys set here. Now, whether actually, let me finish the game plan and then we'll talk about the buys, because the next portion to the game plan is understanding strength or weakness. Okay, so the bias is bullish because we tapped into this imbalance here. Okay. But now notice how ES did not tap into this imbalance at the same time that NQ did tap into this imbalance. Throw it in chat. If anybody here knows what I'm about to say, before I say it, let's take a quick little test to see if chat knows what I'm referring to here. NQ tapped into the daily FEG while ES did not. What does that show us in terms of strength or weakness between NQ and ES? Amazing. Amazing job, everyone. That must have been an easy one. Very quick answers. Very good job. There's a crack in correlation here, right? ES and NQ are two correlated assets. They should be moving the same at the same time. So that shows a divergence, right? SMT. The fact that NQ took out this low from Friday and tapped into the bullish imbalance while ES did not. Right? You can see it here. That is a divergence between two correlated assets. Right? So in terms of creating the game plan, now we understand time, right? We're looking to participate during New York Open. We know that there's no high impact news drivers that we have to be aware of. Then we created a bias, right? We're talking about a bullish bias because price tapped into a bullish imbalance. And now price is tipping its hand. It's saying, look, something's about to happen here because of the divergence. Right, so we get bullish SMT. This is almost acting as a confirmation to the idea being the bias. Okay, now you can also see, hold on, I keep skipping ahead. You got to finish the game plan. Then we can get to the buys. All right, so game plan. Time being New York Open and no news drivers. Bias being bullish because of the tap into the bullish imbalance on the daily chart. And then we also had the Asia session liquidity in terms of a draw on liquidity. Last part of the game plan is entry function, right? How are we going to use this game plan? We got the information, but now we have to operate within price action to take advantage of that information, right? This is your entry function. This is your model, whatever you want to call it, the way that you engage with price. There are many different models, and I'm not going to sit here and say that one is better than the other. The only thing that matters is you're either green or red at the end of the day. Right? So you can use moving averages, you can use opening range breakout, you can use the unicorn model, you can use inversions, you can use, there's so many things out there that you can use. It's a matter of what resonates with you, what you can clearly identify and define, and what you can operate with. Okay, so again, I'm not going to sit here and say that one is better than the other. feel free to be an independent thinker. And that is what I would suggest you move forward with. You collect the data to understand what model you can operate the best. It doesn't matter what anybody else is operating with, because nobody else is going to click the buttons for you. Okay, so you have to put in the work, right? You have to collect the data. And this is why I'm going to keep saying it. A lot of these things are going to be repeated because less is more, quality over quantity. You have to take extreme ownership of how you operate. And you do that by collecting the data. Show up, get the experience, because the experience is what creates the conviction. Okay? So, for me, I use the unicorn model. The unicorn model is simply a breaker block plus an FVG. Okay, so this is what I operate with in terms of executing in price action. So since we're bullish today, I would be looking for a bullish entry function. Okay. Now that we have a game plan, that's when we can go in during New York Open. Where'd my game plan go? Give me 2 seconds. There we go. That way we can see it as we're waiting and watching. There we go. All right. This is the SMT here. We're going to take that off though. Oh. And this is the daily bullish imbalance, so we'll leave that there. Okay, now for entry function. This is how I operate in the market. Again, feel free to operate however you'd like. There is no right or wrong. There is only red or green. Since I'm bullish, I'm looking for a bullish breaker with a bullish FVG aligned with it. A breaker is simply an initial swing low, then an initial swing high. Price takes out the first swing low and then goes and makes a new high. The bullish breaker will be found in the initial swing low to the initial swing high. A bullish breaker will always be an up close candle. Okay, so the bullish breaker will be found right here. And I want to see an FVG aligned with it right here. Okay, so take what you're seeing right here and now do it within price action. So let's get rid of these. Let's head over to the price action. A couple more seconds, almost there. Okay, so now we're going to point to all of the concepts that I just referred to. First thing being time, right? Oh, there we go. First thing being time, right? New York Open. Almost there. I thought I was able to make this smaller. Oh, yep, there we go. All right. All right, so first thing being time, right? I'm annotating time being New York Open, 9:30. Okay. In a bullish bias, I'm looking for a bullish entry function. You get the swing low here. You get the swing high here. You get the new low here. You get a new high here. So now in terms of the entry function that I was referring to, we have the up close candle in the initial swing low to the initial swing high. Therefore, this being the breaker. And then notice how you have FVGs or imbalances aligned with it. All right, so the unicorn model is simply a bullish breaker that has an FVG overlapping it. Now, in terms of executing, when I go to execute, place an entry at the beginning of the breaker, I place a stop at the low, and aim for 2R. All right, so that's why you can see the buy limit there. That's where the entry would occur. Invalidation to the idea would be the swing low. All right, so stop loss would be placed there. Whether you want to put a hard stop, meaning the order is sitting ready to be executed, whether you want to manually do it yourself, that's where you become an independent thinker. And again, you collect the data to understand how you best operate in the market. And then take profit would be up here. Right, so it is also nice to see that the Asia highs are here, right? So in terms of a draw on liquidity, it is near the 2R take profit. So now we have a defined game plan. We know how to operate that game plan. And now we have defined a risk, right? Now we know where entry would be and where invalidation would be. This is when you then measure your risk. Okay, so stop being 27 points. Are you willing to accept 27 points on ES? Or is that too much risk? Right? Be an independent thinker. Know thyself. Right? Whether it's a mental or emotional response. Right? If you can't handle this much risk mentally or emotionally, then simply just go down to MES. Very simple. Just go down to MES, okay, the micros, for smaller position sizing. Because the market determines the entry, the market determines the stop. You determine your risk. If you're not willing to accept this much risk on ES, just go to MES for a smaller position size. Okay. Next, we'll go into management. Let's go into management next. Very simple. You have two options here. Are you going to do a fixed risk to reward? Meaning you either accept a stop loss or a take profit. Those are the only two results that you would get in terms of this position. That's what a fixed risk to reward would be. Or the second option is managing your risk during the position, right? Are you the individual to raise their stop loss above entry at some point during when you're in profits so that you only hold the position if it's risk-free, right? Are you willing to accept break even as a result is what it comes down to. Are you willing to accept break even as a result, or are you going to do a fixed 1 to 2 or 1 to 3? Or, you know, again, being an independent thinker, this is where you answer those questions. Figure out what works best for you by collecting the data to gain the conviction. Okay, so last portion to it is understanding the mental or emotional side of this business, right? I didn't get an entry, right? Because after my entry function was confirmed, price has not retested that before moving higher. I'm not willing to chase price. I'm not looking to chase price. Either price fits the model and it executes the way that I execute the model, or I don't get a trade. And that's okay with me. If I don't get a trade here this morning, that's fine. Right? This is the understanding of the mental or emotional portion to it. Or are you going to be that individual that instantly enters the position, chases the position higher, whatever you want to call it? You have to know how you operate. And then you have to be able to align your actions with those words. Okay, so there's the game plan for today. We ended up getting an entry function that aligned with the game plan. Therefore, I was willing to take the risk. Orders were submitted. They've yet to be entered, right? The orders haven't gotten filled, obviously. So we just sit and wait. We just be patient. Okay. Now, during the days that your entry model does not present itself, it'd be very clear to understand that there's no trade to take. And in my opinion, you don't need to take a trade every single day. Okay, less is more, quality over quantity. You'll hear me say that another million times the more time I spend here. Okay, so if we get an entry, great. We'll accept the risk. If we don't get an entry, great. We'll move right on to tomorrow. Now is just a time to be patient and allow the probabilities to play out. Let's see what we get here today. If you'd like to throw any questions or comments in chat, feel free. Gladly go over any information as we're waiting.
Ash, you're on day 2 here. You've built quite the fan base already. We don't have enough unicorns flying in the chat yet. I would like to see more unicorns. So if you guys could help me out with that, I don't know if it does anything for Ash, but it gets me going when I see the unicorn. So I'd like to see that. And as Ash mentioned, questions for him. As y'all can tell, you're working with, you have the opportunity to interact with somebody who has an undeniable expertise in discipline and a very methodical way of thinking about markets. So drop the questions in. We're not scared of them. I might be scared. I don't know the answers. But Ash is not scared of them. Birthday boy. 30.003 years old.
Yeah, first day of the 30s.
I don't know if you saw any questions that interest you, Ash. If not, I can grab a couple for you.
Let's take a look. Let me hop over to chat real quick.
All right, hop over to chat. Yeah, give her a scroll. If not, I've got a couple lined up for you.
Here's a good one. Was there a game changer moment in your journey? Yeah, there definitely was. There was definitely a game changer moment. To be honest, I believe this model was the game changer moment. Having defined justifications to my actions is what allowed me to understand what was a trade and was not a trade. And the results came with it. So having that understanding of, how or why I do things is very important so that I'm not just impulsively acting. There's a reason why I do this. There's a reason why I do that. Right? Those justifications to my actions led to multiple 4-figure payouts, multiple 5-figure payouts, and even a 6-figure payout. Right? And, it truly only takes, one good month, one good year to earn back all of the time that you spent learning. Once I realized that having a process, being process driven, allowing the results to be a byproduct of that allowed me to focus on the discipline, the patience, the mental and emotional intelligence needed to operate here. Everybody is very attached to a dollar amount or just, a monetary status. You're going to have to detach from that here. It's not an easy thing to do. We weren't exactly educated this way growing up. So there's nothing easy about it. But being process driven by having defined justifications to my actions was what aligned me to be able to control those mental or emotional aspects to trading. That's what allowed me to detach from the outcome. And when you allow the results to be a byproduct of your hard work, your attention, your focus, that's when you'll start to see some results. So very, very good question. Here's another good question. This one's regarding execution. How long do you keep your limit order on before giving up on the plan? First answer is if price goes to the target without giving me an entry. Okay, so for example, price has not given me an entry yet this morning. If price went to the target before giving me an entry, then I would no longer consider this position. Okay, that's the first answer. The second answer is time. I'm not looking to stay on the chart for 8 hours a day every single day. I focus New York Open. If the position is not entered before lunchtime, then I'm done for the day. I have other responsibilities throughout my day. I have other businesses that I need to take care of. I need to keep health as a priority. Okay, so I'm not going to enter a position if it's outside of the hunting hours, right? The time that I've designated to myself to risk in the market. So another very good question. At that point in time, if one or two of those scenarios happens, then we'll just cancel the order and again, allow the result to be a byproduct of those decisions. Another very good question. Let's see if I'll go and grab another one. Give me 2 seconds. Getting over to chat. Have you ever felt pressure to succeed in trading because your family is depending on you? Phenomenal question. This is one of those mental or emotional tolls that we have to deal with in terms of trading. In my opinion, you should have multiple sources of income. Okay. However you want to do that is completely fine. In my opinion, your main source of income should always take care of the bills, right? Your main source of income should cover the mortgage. It should cover food. It should cover utilities. It should cover savings and spending. Your main source of income keeps your family safe, keeps your family healthy. Okay. Then knowing that your family is safe and sound That's when you go get a secondary source of income. Go work a weekend job, go work overtime, work more. Put in more work. Take more time for the things that you want in life. Then, when you have a secondary source of income, that's what is used to fund your business. Because there will be so much less mental or emotional side effects if the money that you're using to risk was meant for risking. Your family is never put in harm's way. Your family is always safe and sound. Your health is always safe and sound. Then use the secondary source of money to fund your trading. And you're going to be able to allow the results to be a byproduct when the money that you're using was meant to be spent on the business. It was meant to be risk. So yeah, there is always a pressure of wanting to do good, right? Obviously, if you do better in the markets, your family would be in an even better situation. But the first answer is always make sure family and health are top priorities. Make sure you have a main source of income to confirm that they are safe and sound. Then go get a secondary source to fund your business. Very good question. Very good question. Grab another question here. Let me take a look. What is your process that you went to, what is your process that you went through to become profitable? Years and years of testing, trying theories, looking at results, trying to refine. Congratulations to the people that become profitable in the first week, first month, first year, so on. Everybody is on their own path in life. It doesn't matter when you become profitable. Also, when you do become profitable, that doesn't mean it's guaranteed that you'll remain profitable. Okay. So, one, don't measure yourself to anybody else. You are unique to yourself. You're on your own path. So you don't have to worry about being better or worse than anybody else. The only thing that matters is whether you're green or red. But for myself, it took multiple years, just testing different theories, testing different entries, testing different models, testing different times. There's a long period of trial and error. This business, losing is inevitable. You have to be willing to lose. You have to be comfortable with risk. You have to take risk to even get the data or the conviction that you're looking for. Okay. It took me multiple years. I do have to say my first year, I want to call it beginner's luck because my second and third year did not look the same. But the first year went pretty well. I was profitable in my first year. That was nice. I took the money. I brought my wife on a nice vacation and I spent it on her. The second and third year was, man, that was a wash. That was a tough time. That was just 2 straight years of red, and more red. And it was because of the new shiny object syndrome, the seeing something, trying it because it sounds like it works, and then it doesn't work for me. So then I go and try something else, and that doesn't work either. And I'm just stuck in a loop of trying and trying and trying until I actually found something that worked for me. So there was multiple years of just collecting data. And I'm okay with that. It's fine with me that it took me until my 4th year to actually have a form of profitability. So, in my opinion, I'm okay with that. Everybody is unique to their own process, their own experience. You know, doctors go to school for 15 plus years with no income, right? They're paying for their education for 15 straight years before they ever get a salary. Right? So if you can't take the time to learn, if you can't go through that amount of time, then it's going to be a long, hard process. You have to give yourself an appropriate amount of time to learn. You have to collect the data. You have to build the muscle memory. You have to gain the experience to even understand this business. Okay, so don't compare yourself to anybody else. Understand that it's okay. It's okay, however amount of time that it takes you to get to where you want to be. Just focus on working hard every single chance you get. Allow the results to be a byproduct of that. So if it takes you 1 month, if it takes you 1 year, if it takes you 10 years, I can confidently say that I would do that 100 times out of 100 times. Because what happened in the 4th and 5th year, it changed my life. It easily made the first 3 years worth it just within that 4th year. Some of the payouts that I saw was life-changing. It was life-changing. It paid for a wedding. It paid for a house. It paid to start. It started a business. It really only takes 1 good year. Okay, so another phenomenal question. I don't know why. Is my camera blurry on your guys' end? How did that just get blurry there? Give me a thumbs down in chat real quick if my camera is blurry. On my end, it looks like it's blurry now. I didn't even press any buttons. It just went blurry on me. Maybe I'm moving around too much. I'm not sure what's going on here. Nonetheless, phenomenal question. Try holding your hand in front of it for a second to help it refocus. Let's see if that works. Refocus. A little bit better. At least you guys got to see the wedding ring. Let's see if it refocuses again. My hand looks clear. All right. That looks a little clearer. A little bit better. Sorry for the sidetrack. I saw it on the screen and I was like, what happened there? So, see, and these are great conversations. This is the type of mental or emotional intelligence that we're going to have to go through. And this is why we need to keep showing up each day. This is the type of conviction that you'll get from showing up each day. If you guys want to hear this type of logic, this decision making, if my experience can expedite your experience, I'll gladly share. I have no problem sharing. I own my experience and I'm more than okay with sharing it. So, opinions are just noise. If it took me too long to get to profitability and you were there in profitability in your first month or first year, congratulations. There is no comparison here. In my opinion, let's just keep working and learning relentlessly every single week. Let's show up, share our experiences, because in my opinion, working with other like-minded professionals, getting to gain more experiences than just your own is really going to provide a valuable experience. It's going to expedite that learning curve for you. Okay, so do me a favor, like the video, sub to the channel, turn the notifications on. That way you can be alerted for when we go live again. We're going to be doing this daily. We're going to show up and relentlessly work and learn every chance we can get.
Hey, hello, Ash. How you doing?
Good morning. How are you doing today?
Good morning. I'm doing great, guys. Ash is dropping huge gems today. I think he deserves a W's in the chat. Man, I love your mentality. I love how you're approaching the markets and all that. I think it's very valuable because day trading it's tough, and we gotta have like a solid mindset, solid approach to markets every day in and day out. And hearing your words, man, I'm curious about one thing actually. I gotta ask you this question.
Go ahead.
How did transitioning from being a beginner trader to profitable trader looked to Ash trades? Like, how did you understand that? Okay, I found my edge.
So me, I'm very data driven. Looking at the expenses compared to the withdrawals was the defined proof that actually showed me something was working. And I'm talking about expenses in terms of eval purchases, whatever the amount of money you're using to fund your business compared to the amount of money you've withdrawn in terms of profits. Because I'm not referring to, a trade working out, right? Like, so for example, what I'm trying to say is the unicorn model, just like every other model, does not work 100% of the time. I personally don't believe there is anything in this market that works 100% of the time. So a lot of people get deterred the first time they have a loser, the second time they have a loser, the third time they have a loser. But what they don't realize is if you're risking properly, right? If you have a 1 to 2 risk to reward, and you can confirm that your winners are larger than your losers, at a 1 to 2 risk to reward, you really only need to have about a 40% win rate.
I love that.
That data with the expenses report is what showed me what profitability was. It showed me that losing is a part of the game. You do not have to win all the time. As long as your withdrawals are more than your expenses, that's what profitability is.
Yeah, I love that. So you're a huge risk to reward guy, which brings up another question from my side. Actually, I'm curious, like, how do you adjust crazy volatility in the market when you're seeking, 1 to 2R trading NASDAQ, but your stop loss is at, let's say, 70 points? How do you approach that? What do you do?
We have seen some historic volatility in 2025. Incredible stuff with this current administration. I'll be the first one to say that I've executed the least amount that I've executed in my entire career during 2025. And it's because of that volatility. So in my opinion, staying on the sidelines when you don't have that conviction is more than okay, right? If your normal risk is, just going to use random numbers, if your normal risk is $500, but we're getting 100-point candles on NQ, for me, the market determines the entry, the market determines the stop. Mm-hmm. So larger candles is going to mean larger risk. You can try to position size smaller and that will work, but the moment you lose your conviction in terms of a mindset or a mental state, I'm always going to side on being patient and waiting. So for me this past year, within 2025, I've executed a lot less because of that volatility. And I'm fine with saying that, whether, I'm missing out on gains. I don't have fear of missing out on gains because that gain could just as equally be a loss. So being more patient in terms of times that are more volatile, like we've seen in 2025.
I think that's the biggest development from a trader's perspective, right? Like, not fearing of missing anything out, not over trading. You don't even have to trade every day, but you need to show up every day to get something out of from the market and learn something out of from the market. I love that. And the other thing I was going to say is the fact that growing into knowing when to be sidelines is the biggest valuable lesson that you can learn from the market, I guess, right? That's when you understand you've outgrown yourself as a trader into something bigger. I love that. And another question, I know you trade ICT and all that. This is a personal question from my side. I've been always like wondering, how long have you been trading ICT concepts?
We're getting close to 3 years now. It's more like 2.5. It's been quite some time. I do have to say it definitely resonates with me. I know there's like a whole social media argument of, who created it or what works and what doesn't work. I don't really subscribe to saying something is better than the other. I just think it comes down to what resonates with the individual the most. For me, that's what resonated with me. When I started learning it, there was a huge emphasis on time. Then there was a huge emphasis on how to operate within the market. Mm-hmm. So having a defined way of operating in the market is what drew me into that type of trading. But you can say the same thing as, an opening range breakout trader. You have that 15-minute window that you wait at the beginning of the opening range. You wait for a breakout, maybe a failure of a break. It's all the same thing. We're all staring at the same thing. It really comes down to what resonates with you the most. And the amount of time that it took to learn is not for everyone. It's very extended. The education there's a lot of information, and hopefully that doesn't turn into information overload. So you have to know thyself in terms of if you need less or more.
Yeah, and you found your edge with the unicorn setups. I love that. Yeah. I've always felt like unicorn model is the smallest risk that you can take on as an ICT trader.
For me, it just helps to have certain things happen. It really takes away the impulsiveness. Like, for example, if this low wasn't taken out here at the open, then this isn't going to be a breaker block. And that's what identifies to me that I have no trade to take. Mm-hmm. So there's defined things that happen that allow me to really differentiate what is a trade and isn't a trade, right? If there wasn't an FEG aligned with the breaker, like this FEG here, then I would again know that it's my time to stay on the sidelines instead of executing. So it's just having those certain things that occur that really show me what is and isn't a trade.
Awesome. All right, folks. I'm going to wrap up the show here in a second, but before doing that, Ash, I would like to ask you your final thoughts about the rest of the day for the New York session. So you're bullish, as I can see from your chart. What level are you looking at for the rest of your day?
So first things first is I will be taking this risk off. I had mentioned earlier that I'm only looking to execute when I can provide my sole attention to the market. When lunchtime occurs, I'm heading out to the gym. I don't stay in front of the screen 8 hours a day every day. So when I'm not capable of executing, then I don't take any risk. So we're going to take that off here now that we're closing up the session. In terms of analysis and direction, I'm looking for higher prices. I do think that Asia session liquidity needs to be taken out. Oh, what's happening here? Let's get these things off. I do use Asia session liquidity as a target. And since Asia session has not been taken out yet, this is what I'm looking at for moving forward. I will be looking for a continued move to the highs of Asia session.
That makes sense. Asia lows are gone now. We had the S&T divergence, breaker block, expansion to the upside, targeting Asia high. I like that strategy.
Right.
All righty, folks. Ash, thanks for joining us here today as well, dropping your knowledge, sharing your wisdom with us. We're getting 1% better a day, right?
Exactly.
And we're all here for the same game, to make money from the markets, whether it's a scalp, day trading, or swing trading. Doesn't even matter. We all have one goal, which is to make money, be better every day. So, folks, here comes another day coming to an end. Make sure to like, and subscribe to the channel. We're going to be dropping a lot of gems tomorrow. We're going to have a special guest. Ash will be joining here tomorrow as well. And get us to 10K subscribers. Luke promised y'all a special giveaway for 10K subs. So make sure to smash that button, and we'll see you tomorrow. Have a good day, guys.
Have a nice day, everyone.